So my prediction, I think the next month or so is going to be extremely volatile. Maybe sometimes to the upside, maybe sometimes to the downside. We've generally kind of chopped between 90,000 and 110,000. This is a wear you out type of scare you out moment. Okay. I've drawn it similar to 2017, where people don't remember the first time Bitcoin ever closed above 2,500 US dollars was in June. It then ended that year, 2017, at 20,000. So in 6 months, it went from 2,000 to 20,000 at 10x in 6 months. I think something similar to that this year. I think it'll be volatile over the next month, this new administration. You've got Jerome Powell and Trump disagreeing. And then I think after Q1, I think we're going to get a weaker dollar. And then I think Bitcoin's going to explode. It'll go between 250,000 to $1 million.
Jack Mallers is leading the way in the acceptance of Bitcoin and promoting a future in which everyone can easily and instantly make payments anywhere in the world. He sees Bitcoin as the cornerstone of a new financial system that upends established banks and gives people more power rather than just being an asset. Mallers highlights that the next stage of Bitcoin adoption will be fueled by practical uses, such as merchant payments and remittances, and that established financial institutions are ill-equipped to handle the upheaval that lies ahead. For more videos like this, please take a moment to like this one, subscribe to the channel, and enable post notifications. Thank you, and have fun with the video.
I think this has to do with a strong dollar and liquidity. I've told you guys a million times, 100K is a very big psychological number for Bitcoin. I think it's going to take a second for Bitcoin to firmly rip through and say goodbye to $100,000. Markets either scare you out or wear you out. Markets are not fair. They're ruthless. And I think Bitcoin has been the best example in the most free market at both scaring you out and wearing you out. Scaring you out. What does that mean? A 10%, 20% drop in one night. Oh, it hurts your stomach. You're like, oh my gosh, there goes my net worth. There goes my savings. Should I sell this thing? Is everything I believed in yesterday still true today? And wear you out is when it chops and chops and chops. You're like, man, I thought this thing was supposed to go up. I thought this thing was supposed to buy me my house, my new Lambo. And that's traditionally how markets shake out participants. Traditionally, it's very hard. It takes a lot of conviction, a lot of patience to win the long term in investing, in trading, in saving. And so Bitcoin has been that historically, and I think it will continue to be. So my prediction, take it for what it's worth. By the way, I don't trade Bitcoin. I save Bitcoin. I don't ever speculate. I don't draw lines on charts or anything like that. But take it for what it's worth. Okay. I think the next month or so is going to be extremely volatile. Maybe sometimes to the upside, maybe sometimes to the downside. We've generally kind of chopped between 90,000 and 110,000. This is a wear you out type of scare you out moment. Okay. I've drawn it similar to 2017, where people don't remember the first time Bitcoin ever closed above 2,500 US dollars was in June. It then ended that year, 2017, at 20,000. So in 6 months, it went from 2,000 to 20,000 at 10x in 6 months. I think something similar to that this year. I think it'll be volatile over the next month, this new administration. You've got Jerome Powell and Trump disagreeing. And then I think after Q1, I think we're going to get a weaker dollar. And then I think Bitcoin's going to explode. It'll go between 250,000 to $1 million. I think this new administration is going to bring a lot of volatility. I think that's normal. I think the dollar's way too strong. And I think there's not enough liquidity in the system. What we're going to get from Trump, from the Fed, from both, from any financial authority, from the Treasury, is we're going to get direction on how they plan to weaken the dollar and pump assets. I still think that we've got more volatility in the near term future. I think the long term, I think over the next 6 to 12 months, we're going way higher. I still stand by my prediction that this year Bitcoin will go 250K to $1 million. But in the short term, I think this is a scare you out or wear you out market. I fundamentally believe that. And so I expect more volatility. It does not surprise me that Bitcoin was not over 100K forever, that we dipped below it. I think now we're back above it ever so slightly. I expect some more wear you out, some more scare you out. Longer term, Bitcoin's going to the moon. Shorter term, I would personally expect some volatility.
According to Jack Mallers, one of the most revolutionary economic policy decisions ever made would be for the United States to establish a strategic reserve for Bitcoin. In contrast to previous rulings that have benefited the public, like confiscating gold, eliminating the gold standard, or saving Wall Street, this would be a pro-innovation, pro-growth policy. Mallers highlights the genuine decentralization of Bitcoin, pointing out that even Satoshi Nakamoto, the cryptocurrency's founder, had to waste energy mining his first Bitcoin. Today's Bitcoin owners have all put up effort to obtain it, whether through mining, employment, or business. He argues why Bitcoin's proof-of-work mechanism is what makes it the most robust currency and the perfect reserve asset. Also, a quick reminder, only a small percentage of viewers are subscribed. If you enjoy deep dives into crypto and finance, hit that like button and subscribe. It's free and helps the channel grow. Now let's get back and hear what he has to say.
In my opinion, Bitcoin Strategic Reserve would be one of the most important announcements in U.S. economic history. However, unlike past important economic announcements, this one would be positive, okay? Traditionally, economic announcements in the U.S. have been seizing assets like gold, divorcing from monetary standards and monetary policies, like in 1971 when we left the gold standard to debase and inflate the lives of the public. They've been, like in 2008, bailing out corporations, Wall Street, private businesses at the expense of the people. These are all announcements that are negative. These are all announcements that are against the public, that are against the best interest of the people, okay? They are taxing the individual. They're taxing all of us via inflation, via bailouts, via currency debasement, via asset seizure. This announcement would be the opposite with Bitcoin. Here you have an asset and a money that has a monetary policy that cannot be changed. Here you have an asset that was accessible to the people before it was accessible to Wall Street, before it was accessible to governments. Governments own 2, 3, 4% of the Bitcoin network. The Bitcoin network is majority owned by the individuals around the world. It has a monetary policy that no one can change. It is an asset and a network that no one can control. So this financial announcement is pro-jobs, pro-industry, pro-energy, pro-technology, pro-innovation, pro-growth. This addresses the biggest problem we have in the United States of America, which is our deficits, which is our debt. Okay, it addresses some of the biggest initiatives we have in America, which is how do we drive growth? How do we drive economic prosperity? Also, how do we push American ideals globally? Right? You're talking about AI, global warfare, Russia, China. How do we push freedom, inclusion, democracy? How do we push that not just with words? And certainly we don't want war. How do we push that through technology? Bitcoin. So this is a rare announcement that is as important as any economic announcement in the last 100 years in the United States of America. However, it's positive, it's progressive, it acts in the best interest of the public. Now, all of those reasons don't apply to Ripple. Ripple is not a monetary policy that cannot be changed. Ripple is not money that the people and the public had access to first. Ripple printed all of its tokens at once and allocated it to themselves. The way the public gets access to Ripple is they buy it from the company. It is a private business. It is not an open public utility for all. It is not decentralized. It is not distributed. It is not censorship resistant. Ripple is acting as if it is pro-technology, pro-growth, pro-innovation, pro-freedoms, pro-the public, pro-the people. It is not. Private lobbying to the government to support their Ponzi scheme is where you cross my line. I want to be a father. I want to raise my kids in my country. I want to address our fiscal situation, our deficits, our debt. I want to grow. I want to spread democracy, freedom, inclusion, open source technology through the world. The answer is Bitcoin, not Ripple. Listen, Satoshi Nakamoto, the creator of Bitcoin, even had to mine his. Okay. For those that don't know, Bitcoin was distributed through proof of work, through mining, through energy. Satoshi Nakamoto had to give energy to get his first Bitcoin. Even he didn't get any printed and handed to himself. Anyone, let me tell you guys something. Anyone that owns Bitcoin today has had to give energy to get it. I'm going to say that again. Anyone that owns Bitcoin today has had to give energy to get it. Energy is the base layer of money. Okay, it's the currency of the universe. Whether you're Satoshi Nakamoto and you had to mine your first Bitcoins via proof of work, or whether you're Michael Saylor and you had to contribute your life's time, energy, and work to creating a company, creating MicroStrategy. How many hours has Saylor put into his business, put into his craft, put into his profession, put into his employees, his board, his shareholders? Acquiring Bitcoin through energy is not just mining it. We all spend time and energy every day to contribute value to this world. And in return for that, we get money. And Bitcoin is the best money, the world's money, the future world reserve currency. And everyone that owns Bitcoin right now, whether you mined it or not, had to produce valuable energy to get it. That is not true for altcoins, for Ripple. There's a select group of people at a private company that did nothing but print it for themselves. That is not contributing energy to society, value to the world. That is the difference.
Jack Mallers argues that Bitcoin is the best money because of its decentralized structure, unchangeable monetary policy, and equitable energy-based distribution scheme. He emphasizes that the majority of the Bitcoin network is held by individuals globally, with governments controlling only a small portion of it. Bitcoin is a special weapon for economic progress, financial sovereignty, and international stability because it is uncontrollable, unlike established financial systems. Mallers contends that Bitcoin solves important U.S. economic problems like debt, deficits, and the need for technical development. In a moment of geopolitical rivalry with countries like China and Russia, he views it as a means of advancing American values of freedom, acceptance, and democracy globally. He thinks that the best way to advance these ideals is through Bitcoin, not through conflict or meaningless rhetoric. By contrast, he strongly attacks Ripple, describing it as a privately managed, centralized asset that was pre-mined and transferred to insiders instead of being distributed through equitable, energy-based proof of work. Arguing that Ripple essentially lacks the attributes that make Bitcoin attractive, he rejects the company's lobbying activities as a phony attempt to market itself as a financial instrument that supports innovation. Mallers concludes by restating that energy is what generates Bitcoin, whether it is through mining or by using labor and creativity to add value to society. Bitcoin is a real reserve asset that supports the values of decentralization, hard labor, and financial justice, in contrast to altcoins that are invented by insiders. And as always, happy investing.